Remove the confusion. If you make under $50,000, it's LLC. If you make over $50,000, it's S Corporation. Do you want to pay into self-employment taxes if you make over $50,000? No, you want to pay payroll taxes. Do you want to pay into payroll taxes when you make under $50,000? No, you want to pay into self-employment taxes. If you're not at $50,000 yet in profit, you don't need an S Corporation. You need to stay with your LLC.
S Corp has better tax benefits than an LLC. And there's many reasons for this, but the primary reason is because of the self-employment tax that's attached to the amount of income that you receive as an LLC opposed to an S Corp. So let's just run through this really quickly. Both entities brought in about $115,000. Their expenses came out to $15,000, netting them $100,000 in both. The difference in this is $100,000 goes directly to this person's 1040 form. And they can put about $25,000 to this SEP, but the issue is they'll have to pay this much in self-employment tax. Whereas with the S Corp, you're able to choose what you take as an owner's distribution, a K1, and what you take as a W-2. So in this situation, on $100,000 of income, I will tell you to put $70,000 as your K1, $30,000 as your W-2, and you only pay that 15.3% self-employment tax on this $30K. So instead of $15,000, you're only paying in self-employment tax. And you also get a larger contribution to your 401k because you could put $20,500 plus 25% of whatever your W-2 is, which is $28,000.
This is Jay. Say hi, Jay. What up, y'all? And this is May. Say hi, May. Hey, y'all. Now, Jay and May just started a business where they both profited $100,000. But Jay had an LLC and May had an LLC taxed as an S Corp. Let's see the difference when they go file their tax return. So when Jay went to go file his tax return, he said, ah! I mean, he screamed so loud that May was in the waiting room and she spilled coffee on her. Dang it, Jay! I'm sorry, May. Now, the reason why Jay screamed is because he had to pay two types of taxes when he went to go file. One is federal tax of $20,000. The other is self-employment tax of $15,300. So Jay's total tax is $35,300 as an LLC. Now, after hearing Jay scream, May was really nervous to go file her tax return because, you know, they made the same. But May was actually like, hip, 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 hooray! Because the only tax that May had to pay is a federal tax, not self-employment tax. So May's bill was only $20,000. So that's essentially what an S Corp does. It completely erases self-employment tax. So the IRS is starting to catch on. They're like, all right, May, that's kind of clever. You just set up an S Corp and you don't pay any self-employment tax. But the IRS is like, look, that's not totally fair. Can you do us a favor and please pay a portion? And May's like, how do I do that? Sure, I'm down. So the IRS is like, look, all you gotta do is set up payroll and pay yourself on a W-2. Because every time you pay yourself on a W-2, you're gonna get hit with that self-employment tax. So May's like, okay, can I just pay myself $0? Then the IRS is like, no, because you're not gonna pay any self-employment tax. Please make it a reasonable amount. Then May's like, what about $30,000? The IRS is like, sure. So May is gonna pay self-employment tax on $30,000, not the entire amount. That's essentially what an S Corp does. It helps you save on self-employment tax. It completely eliminates it. But the IRS is just like, can you still pay a few by running a reasonable salary? And every time you run a salary, you're paying a little bit of self-employment tax.
Everyone talks about the benefits of an S Corp, but never show you the process of how to get it done. So let me show you. So first you need to download Form 2553 with the IRS on the IRS website and just follow the instructions on the page. You need your company's name, the address tied to it, as well as the EIN number and the date it was incorporated, as well as the state that it was incorporated in. Next, if you need to change the name or address of your business, then you just go ahead and check one of these boxes. Typically, if you don't, you could just skip this. E is talking about the effective year that you want this to take place. And since your company started last year, we're just going to put the same date that it was incorporated in. F is calendar year. You don't have to worry about G. H You want to make sure you put your name, your title with the company, as well as your contact information. I has to deal with if you're sending this in late, and I'll discuss that in another video. But at the bottom, you could go ahead and sign your name, what your title is, which it should appear the same, and as well as the date, and it should appear the same as in section H. If you have any partners, you're going to put both of your addresses here, as well as how much percentage you own within the business, the date of issue, your social security number, as well as the tax year, which is typically 12/31. The other pages you can just skip unless you have a special situation. And lastly, here's the fax information or the address wherever you want to send it. And if billionaires can do, everyone talks about the benefits of